Well, good morning, everyone. Thomas Montgomery, IIMFL Smart Money Alliance. It is my pleasure to visit with you this Friday, February 26, 2021. It's a pleasure to get together with you, our distribution partners. We have three types of distribution partners that get together most Mondays through Fridays at this time, around 8 a.m. or a minute or so before. And we have affiliates. Who wouldn't want to be an affiliate? It's free, it's easy. You help promote access to capital, a grant subsidized program. There's no upfront cost to the client, $100,000 guarantee to the client, no minimum credit score for the client to enroll, no minimum time in business. It is outstanding. And so nearly every small business, not all, but nearly every small business wants and needs additional capital to start and grow. So the affiliate role is just almost too good to pass up. Secondly, we have our credit literacy educators. Those are experts that are out educating. We have the Credit 101 that we talked about earlier this week, as well as you can just do more impromptu. Just like our affiliates, credit literacy educators are not salespeople. They do not sell anything to anyone, but instead they educate, they create awareness, and refer into the landing pages that we provide. And then thirdly, we have the top of the food chain, our joint venture partners. They're very different than those other individual roles because our joint venture partners operate as mentors and literally work with the clients through the 4-week process. And they're out there writing the key person policies. They're paid $100 an hour to mentor the orphan clients as well. Okay, so with that being said, I've got an agenda that's shown here on the screen, some important topics I feel. So I want to go through those, and then we're going to get to all the Q&A that you may have that you submit in the question answer function of Zoom. All right, so on miscellaneous mentoring topics, number one, as we have started recently, we start new access to capital clients on Mondays. So the next coming up Monday is March 1st. We'll be assigning those clients, we call them cohorts. So a cohort, we had a training about this, means a group of people that are all going through the same process at the same time. So we have a bunch of you that have been receiving a cohort each week. Some of you have received multiple cohorts. And so we'll be kicking this off, repeating that cycle. So over the weekend, Saturday and Sunday, those new clients will be assigned. I realize that you may have some clients that have submitted their DocuSign in for access to capital earlier in the week and it hasn't been processed yet. Right now, we're processing them in a batch and assigning them on cohorts like we're talking about. Now, we are going to migrate to a new, more efficient, more of a real-time system. We've talked some about that. We're anticipating that that'll be launched in March. We've hired the consultant. It's a programmer. It's being developed, but it's not live yet. So we're not going to spend time or energy worrying about describing the new, better system, which is new and better. But right now, they come through in batch. So yes, you may have had clients that have signed their DocuSign and it's been in the queue since Tuesday, Wednesday, Thursday, so forth. But those will be processed this weekend. They'll be onboarded. They'll be assigned a mentor. Okay, so that is number one. In terms of mentor expectations, we've talked about this before, but if you can at all, please try to reach out to your new clients, the clients that you're going to mentor, either over the weekend after you receive them or sometime during the day, Monday. For whatever reason, once Tuesday comes, they all start, or many of them start to get wired, and I haven't heard from my mentor, what's going on, and so forth. And so it just creates unnecessary communication. And as we've talked about, please try to reach out to them at least in 2 different modes of communication. Email is fine, but I wouldn't use that alone. I'd also send them a text or a call, get them your Calendly link, and get them scheduled. I know one of you had a client that wanted to switch mentors. Normally, we don't switch mentors. If there's some extenuating circumstance, we can revisit that, but generally not. They can't switch to me. They can't switch between different mentors. That doesn't work well. Okay, so that was bullet 1. I think we're covered there. So just clarifying, yes, you might have clients that are in the queue that submitted their DocuSign. And frankly, we've been a little bit behind in even processing this week because we've been working on migrating systems. And so that combined with explosive growth has slowed the process down. But again, things are going to be so much better once we have the new system fully operational, which we're getting close to that. All right. Bullet number 2. This is really important. And I know many of you are experts, and a lot of you know a whole lot more about credit than I know. And I'm not embarrassed to state that. But I would like to work through so we have a common understanding of a few principles about credit. So let's start with the question, how does one improve credit? If you or I or someone wanted better credit, how would you get better credit? In general, it's a function of one or both of two items by adding positive and removing negative. Now let's dig a little bit deeper into adding positive. So how would adding positive credit improve one's credit score? Does it just happen instantly? Well, we can add an authorized user account to a client, and yes, that would create a nearly instant improvement in their credit profile. But it shows as an AU versus as a primary account, and many lenders treat those differently. We had a client yesterday that went to funding, and they were very dependent, unrelated to us, on AUs. They had a very thin file themselves, and that specific lender would not approve them, even though they had a great credit score, because really it wasn't their credit, it was other people's credit. Did it reflect on their credit profile? It did, but it's very difficult, if not impossible, to game the system. So you can add a bunch of AU accounts, but that doesn't count the same as you demonstrating responsibility for your own credit. But let's go through the process of how we add positive credit. First, one needs to apply for credit. It's very unusual, and that doesn't mean it has to be a hard inquiry, but it's very unusual to get an extension of credit without an application. So in general, we have to start by applying for credit. Then we have to get approved for credit. In many cases, it's not until that we're approved for credit do we actually know the terms it's extended to us. Now, with the financing instrument we have, we call the safety net, the $2,500 loan, which is referenced down here, we know it's 0%. Can't get lower than 0%. So I'll skip ahead for a moment and stick on this bullet, and then we'll bounce back. We're doing incredible volume of those $2,500 0% loans. That is a real difference maker for some of these subprime individuals that can't qualify for anything else financed, because the way that they've managed their credit in the past has been so bad that they can't get approved for anything else. And so what you and I are offering is anyone that just agrees to the terms, which include 0% financing, we will loan them money. We're loaning out hundreds of thousands of dollars a month now. It was important for us to have a sister company that is a true lender. IIMFL Smart Money Alliance is not, neither of those nonprofits are lenders, but we have a sister company that is a lender because we're moving towards becoming an SBA lender. Well, to no surprise, you can't just go to the SBA and say, I want to be a lender if you don't have lending experience. So now we're building a book that'll soon be over $1 million of loans outstanding through this $2,500 program. So we're helping people get approved that couldn't get approved anywhere else. Now, the third step, so I'm back up here to the credit refresher. How does one improve credit? We're talking about adding positive. We normally start with applying for credit. Then we have to get approved. In many cases, you don't find out the terms until you get approved. But for our in-house product, of course, it's always 0%. So no mysteries there. No predatory lending, right? No one can argue that 0% is not affordable. The only way to get lower than 0% is to pay them to borrow money from us. Now, the third sub-bullet's really important. You have to pay your bills as agreed. We have people that are enrolling in the $2,500 loan, the safety net program, and defaulting on the damn thing in week 1 or 2. It's insane. So are they building positive credit or are they building negative credit? They're building negative credit. Why would you want to put effort into building negative credit? It's insanity. But in general, if you apply for credit, and you get approved for credit, and then you pay as agreed. And as long as it's through a system that reports to one or more of the three main credit bureaus, then that helps us improve credit by adding positive. And that's really what Credit Boost is about, is adding positive. Now, the other side of the equation isn't adding positive, it's removing negative. Now, removing negative, this is a sensitive topic that we could look at from a number of different perspectives, but let's take a high-level professional look at it. So if there's something that is on your credit report that is really yours, then one could argue, I'm not casting my opinion nor the opinion of our organizations. I'm just saying hypothetically, if it's your debt and you haven't paid for it, maybe you should pay as agreed or make good on it. Now, what we often will do is advise clients, hey, is that yours? I had a client yesterday, but even broader than that, it's frequent that we have clients that have some collection accounts that are small. And it's like, well, why don't you reach out to them, negotiate some reduced amount, get it in writing that they'll delete it off your credit report, called pay for deletion, and make it go away legitimately. So you've now satisfied the debt, granted often at a reduced amount. They've agreed in writing to take it off your credit report, and your score is going to go up and you're going to look a lot more credible. So that is an option. Not the only option, but that's an option, is to pay your bills, but pay it in such a way that the reporter of the derogatory is agreeing to remove that derogatory if paid as agreed. So that's one option. Now, sometimes you'll have derogatory items that are not yours. And so there are certain federal laws that protect us as consumers, because anything that's on our credit report must be accurate, complete, and verifiable. So there are credit repair companies, many of you are affiliated with some, which is fine, that can help contest the derogatory items under these federal laws, based around the concept that everything must be accurate, complete, and verifiable, and could have items removed. Now, I don't want to get into an ethics discussion, but you could argue, well, if it's really yours and you're lying to get it removed, is that ethical? Well, we don't do credit repair, so we don't have to be your moral barometer, but these are the two main ways to get negative items removed: pay for deletion or use credit repair. Now, again, credit repair has its greatest applicability when it's really not yours, but if it is yours, is it possible to still have negative items removed through this process? I suspect so, but I'll leave that to our credit repair professionals. That's not what we do. All right, as I mentioned a moment ago, we are driving through massive volume. It is so exciting to see how many subprime clients that you and I are helping now get loans that couldn't otherwise. Now, of course, the $2,500 loan is funding the refundable deposit for the Access to Capital program. It's like if you go to a car dealership, right? And you apply for a $71,000 car loan, like I just did, and you get approved. Do you walk out with $71,000? No, you walk out with the car, right? And then they get the money. So what we're doing with the $2,500 is not giving them a cash disbursement. Instead, what we're doing is facilitating a loan that covers the refundable deposit for the loan package. And so we're seeing great volume with that, which is awesome, because we're helping people build their credit. We're helping them get their loan packages put together. We're helping them demonstrate responsibility so they can move from subprime to prime. That is huge. You all should be extremely proud and excited that together that we're helping subprime people get funding, even if it's just the $2,500, because a lot of them are locked out of the credit markets based upon their current circumstances. So pat on the back to each of you for being an important part of that solution. Okay, next, still under the topic of credit. On Credit Boost, and we talked about this yesterday, but it was the weirdest thing. I had several of you come back afterwards and ask what seemed to be repetitive questions. So if someone enrolls in Credit Boost, we don't charge them up front, right? There's no upfront charge to enroll in Credit Boost. They agree to pay a performance fee, a very low, probably too low, performance fee based upon their credit improvement while in the program. And that's regardless of what variable has changed. Monique has some clients that she's doing credit repair on while they're also in credit boost. Does the credit boost methodology still apply? It does. Is she still getting paid $5 per point for credit score improvement because she referred them in, even though she's working on their credit and also removing negative? She does. Yeah, that's the payment methodology. So regardless of the reason for the credit score change, whether it was based upon adding positive or removing negative, which we're advising them on, then the methodology remains. So please don't come back and say, oh, don't charge my client what they contractually agreed to because some portion of their improvement was from some unrelated variable. There's no way for us to isolate all those variables. We never intended to. That's why we have the credit boost so affordably priced. It's cheap. It's too cheap for them, in fact. But so there is a clarification on that methodology. And we talked about this yesterday too. So you get $5 per point as a joint venture partner. You get $5 per point of their credit score increase, regardless of what caused that increase. Now, because they're under the credit boost program, we're helping them add positive. We're counseling them on removing negative. That's the agreement that we have. They would need a different agreement if they didn't want that payment methodology, but that's the default. We are now looking for, onto the new bullet, we are now looking for credit repair partners. And maybe I shouldn't say partners, but credit repair professionals that we can refer to, because there are some clients that while we're adding positive, they need some help with removing negative. You know, we can teach them about pay for deletion, but sometimes they need more coaching, more assistance. Some of them want to use credit repair rather than themselves to address derogatories. So if you know of anyone that operates in the credit repair space, have them contact us, and I'll get into the details there in a second. You know, this is not competing. You know, if like take Monique again, she does credit repair, she's working on someone's credit. Are we going to take that credit boost client and refer them to Christine? Of course not. They're already working with Monique on removing negative. We're going to help them add positive. Nothing's going to disrupt. We're not competing with those of you that are in that space. But we have some orphan clients that come to us that don't have any assistance on credit repair, and they desire it, and they ask, well, can you send me to someone? Well, we need a list of who to send to. So we need to know who is accepting new credit repair clients. And so we can get you a high volume of clients. So if that's something that you'd like to do, then all you need to do is email me and let me know the following. Let me know what your proposal is. In other words, what would be the submittal process? What would be the client pricing? It's always better if you have fixed pricing. I don't mean flat, but fixed, predictable, versus, oh, we'll talk to the client and find out. But whatever your pricing model is, so we can let the client know, and then whatever your proposed revenue share is to us. So if you would like to receive credit repair referrals, and we're talking a large volume, then please email us in on this. But again, if you already do credit repair, you're working with your clients, of course, that they don't have another problem to be solved. You're already addressing that. So this is not going to compete or conflict with those of you that do credit repair for your own clients. It's for those clients that are orphaned. They don't have anyone to help them with credit repair, but they would benefit and they desire it. Hopefully that makes sense. Okay, third and final bullet, and then we'll get to the open Q&A here. Third bullet. We have a new business loan program. We just rolled it out yesterday. We started submitting clients through it successfully. It is a business loan. It's not a personal loan. It's not perfect. It's not perfect. They can go above 250, but typically 250 is the cap. So I understand that that's not perfect. The repayment terms are reasonable, but not generous. 3 to 5 years. Not perfect, but it is what it is. They have options for unsecured as well as secured. And this, again, is a term loan. It's a true business loan. They have interest only available for an interim period, which can really help the cash flow for startups, because startups do qualify, by the way. The credit requirements are relatively low, lower than what you would get from a normal banking institution. And it's not 0%. You know, we talked about how we do 0% for our safety net financing. This is not going to be 0%. It's going to be, according to their information as of yesterday, when I prepared for today, it's going to be 7.99 or higher. We don't get paid off of that interest rate. We don't have the ability to mark it up or mark it down. It is what it is. Again, how do we find out what our terms would be? We need to apply. And then if they extend us an approval, then we would know, well, how much did the person get approved for? How long will they have to pay it back? Is it secured or unsecured based upon the application? Do they qualify for the interest only period? And what is their interest rate? So we are not the lender on this program. We are in the process of becoming an SBA lender. We're not one yet. So I can't answer specifically what the client would be approved for, but this is a pretty attractive package. And this can go down all the way to $20,000. So even if they have some smaller needs to get started for an initial tranche. Okay, so with that, we're going to start digging through the questions, comments, concerns that each of you have posted in the Q&A in Zoom. So let's get started. Bernard asked, Bernard's one of our top performing joint venture partners that is mentoring a large number of clients. Bernard, if someone has an insurance policy for themselves, do they have to do the KPP? The key person policy should be a new policy that is specifically for this purpose rather than using an existing policy. So we encourage the client to have a new policy specifically for this use. Thank you, Bernard. And Bernard, yeah, to your second question, those clients that you have in the queue, they'll be processed this weekend. And again, when we move to the new system, it's going to be real time, but right now we batch them and they go out on the weekends for a new cohort starting on Monday. Scott's asking for feedback. So as an affiliate, if you enter them in, then we will send them a DocuSign. And again, we're moving away from being DocuSign dependent. You'll be copied on it. So if you submitted them in, they're in, and you'll first get that feedback once they execute the agreement. Again, in the new system, we'll use online terms and conditions, and you'll have more feedback at more points during the system, because we'll be working off of one integrated platform versus several different platforms now. Because right now we use Get Response to create those landing pages for you, and then they go to DocuSign to send the DocuSign, and then it goes into the CRM. In the new system, everything will just be in the CRM. We won't need Get Response, and we won't need DocuSign. All right, Scott with one T is asking, what's the average length of time from a borrower DocuSigning? Okay, so at FTF, our goal is to take them for first tranche financing at week 2. The mentor should be working with them and helping the client complete the personal financial statement and the soft credit pull for week's 2 task. That comes into us, and in short order, then we should be able to identify the right type of FTF, first tranche financing, for them and moving forward. It could be our in-house safety net if they're really in piss poor shape, or if they have one of the 3 C's like we've all learned, then we can look at the best option for them. But our goal is to get you paid within the first 30 days, as long as we're using external financing. As we've discussed, if they're not very credible and they need to go through the $2,500 safety net loan, that's what it's called, a recourse loan. So that's paid out as earned. They're going to pay $100 payments, 0% interest, pay $100 a week, $400 a month. At the end of each month, we reconcile and then send that out to you. So if they do traditional financing, it's going to be paid typically next day or within 2 business days for the FTF commission, the refundable deposit commission. But if it's using the $2,500 safety net loan, it's as earned, distributed monthly. Yep. And Scott was also asking about the repayment terms. So on the in-house, I shouldn't say in-house, it's a sister company. It's not from IIMFL or Smart Money Alliance. But to answer the question, on the $2,500 loan, if that's all they qualify for, it's 0% interest. They're going to have an application fee of $99 that's charged up front. And then they have low $100 payments. And that first payment also comes out. So they'll see a $199 ACH coming out of their account upon approval. And yes, so anyone that has credit, that has clients that have credit repair needs, we'll be picking them up automatically as we go through, and we'll want to get them into credit boost first. We always want to get in credit boost first before they go to credit repair. And then if our assessment with them is that they would benefit from assistance in addressing negative, then we'll facilitate that. Joseph asked a good question. Is there a difference between the key person policy and the collateral assignment? Well, they're kind of one and the same. The key person policy is the life insurance instrument, and then the collateral assignment is a document that is attached to that key person policy that allows the lender to be paid first in case of the borrower's death. Kenny asked, can two joint venture partners be in the same office? Yes, sir. That's not a problem. Yeah, and Kenny, you're right. So where a business is formed impacts its access to capital. There are many lending programs that are not national. They operate in either certain states or certain jurisdictions, like the Chapman Fund. It's tax supported, right? So if your business isn't based in that taxing district, then they're not eligible. But we certainly can help you with that. And we have an incubator program to help those clients get set up properly in the right jurisdiction to get the greatest access to capital, because location makes a difference. And Scott, yeah, if you have a specific question about a client, you can email in and we can take a look at that. Again, soon with the new system, you'll have direct feedback, so that'll be even better. All right, so Timothy asked, if someone has a business plan created to get funding and a key person insurance, is the capital to access program ideal for them? Well, it's hard for me to answer that question because I don't understand it directly. But what I wanted to clarify is this, that the access to capital client is great for any client that meets 3 criteria. Legal industry. We won't do human trafficking, money laundering, none of that nonsense. So it has to be legal nature. At least one of the owners has to be a U.S. citizen, and the business needs to be based in the United States, or if it's pre-formation, to be formed in the United States. Other than that, they're a great fit for access to capital, Timothy. Refer them in, you get paid, we help them. Robert, yep. Robert is, yeah, so Robert, yes, send that over. I responded to you yesterday. So Robert had a client from Jim, and we talked about this yesterday, that is moving from access to capital over to Capital Ready 3.0 because it's allowing the client to get the commercial address and the credit boost without incremental cost. I don't know if we're going to continue to allow for that, but right now we are, and we do. And so, yeah, Robert, send that over so we can process the client properly, please. Joseph, yes, so we can certainly talk about clients that we base here at our location because we know the lending programs that are available here. If you're wanting to base businesses elsewhere out of Arkansas where you are or where have you, you'll need to check to see what lending programs, especially by the local taxing authority, exist. In our case, it's real simple. We have knowledge of the lending sources available here. And we understand, of course, many of the regional programs, but I wouldn't suggest at all that we know every taxing authority's lending programs in a given community. You would know that in your area versus us. All right, Bernard's asking about a bridge loan. And so bridge loans can be a formal bridge loan, capital B, capital L. And in that case, we're actually lending them money, literally lending them money to pay off or pay down their credit cards. And with that, then their credit card balances go down, their credit score goes up, and then we're able to go after other sources of funding. So that's a private equity loan that is short-term, meant to specifically pay off credit cards. Now, in a looser sense, sometimes we'll talk about interim financing or bridge loans in terms of just interim financing. But the bridge loans are normally funded very, very quickly to the client, and then the client is instructed to use those funds to pay down their credit cards so we can complete that cycle. And yes, Robert, I'll get that to you. I tried to call you yesterday, but you didn't answer, and I think your voicemail was full, but I'll send that to you after our webinar, Robert. Okay, so who else has questions on what we've covered? I'll review it, and then we'll see if there's any other questions. So what did we cover? We clarify that we get new cohort starting Monday as usual. It's all good. You'll be, if you're set up and eligible, you'll be assigned clients. Paid $100 an hour to mentor those orphan clients. You'll be assigned, of course, the clients that you've developed yourself directly. You write the key person policies. Crucial, crucial, crucial. Get those key person policies written within the first month, because if you drag your feet and you or someone on your team's not getting those key person policies written, we're going to get to week 4. We're going to be trying to build the loan package, looking for the bulleted list of documents. And it's like, uh-oh, we don't have the key person policy. You're not ready to go to funding. So if you are a mentor, you either need yourself or have someone on your team writing these policies quickly. Now, we like to write Mutual of Omaha policies that are guaranteed issue, non-medical. You don't have to do that. You can go write the policies wherever you want. But if you're writing something that's fully underwritten, that drags the process out, you're the one that's holding the client's loan package up. So just keep that in mind. All right, and then we did the credit refresher. We talked about there's 2 ways to improve credit, adding positive and removing negative. We talked about that we're doing great volume with our $2,500 loan. You all should be very thrilled that you're part of a system that's extending credit to people that cannot get credit extended to them typically anywhere else. We're a second chance lender, essentially. 0% interest, right? Can't beat those terms. Where else is someone with horrendous credit going to get even approved, let alone 0% interest, right? There is no place else. We clarified that the credit boost payment methodology incorporates simple point-to-point credit score improvement. We can't even begin to attempt to isolate different variables of what caused that score to go up by 10 points, 50 points, 100 points, what have you. We are looking for new credit repair partners. So if you know of someone that could handle an extra 100 or more credit repair clients per month or even less, have them send a proposal in, and that would include what the client pricing and revenue sharing is. And we can see if we can get a relationship set up with them. It does not compete with those of you that already do credit repair. If the client comes to us and they're already having assistance with their derogatory, then there's nothing else that needs to be done. It's being addressed. But those that aren't, those we'll call that are orphaned, some of them are asking for credit repair assistance. And then lastly, we talked about the new loan program that we rolled out yesterday and actually started running clients through yesterday with success. Okay, so I'm going to wrap it up with the questions that are outstanding, then we'll close for today. Yes, performance fees on access to capital and Capital Ray 3.0 are assigned to all types of capital, whether it be revolving, installment, bridge loans, all types. That's the way the agreement's written. Scott's asking how often bridge loans with capital B, capital L are extended. I mean, as often as we recommend. We have a very good relationship with the private equity group. So pretty much we're doing, if we refer the client in for the bridge loan, they're almost always approved. As you would expect, again, these bridge loans are meant to be short-term for a very specific purpose, paying down credit card balances. And so their sweet spot is 15,000 or less. I've seen them go higher, but 15,000 or less is typically the bridge loan for paying down credit cards. Joseph, you just have to contact the different municipalities that you're going to operate in and find out what types of economic incentives they have to start and grow businesses. Start with your local city offices. And Glenn says, I thought this T was business credit. Let me repeat that. I thought this T was business credit. Yeah, I don't know, but there's many different sources of capital, and we just talked about this is a business loan, business loan, business loan. So I think we're on the same page. All right, so we will be back Monday at this time to continue our discussions. What we need to find out from each of you is if you're not a joint venture partner and you're ready to start mentoring, writing key person policies, let us know. Secondly, it is crucial that if you know someone that can help our clients that want to address derogatories, have them send in a proposal by Monday so they can be considered for referrals to help those clients with the derogatory items. All right, thanks everyone. We'll see you back on Monday. Have a good day. Bye-bye.